Welcome to another video by the Option School. This is your friend Pradeep Singla. This is going to be a very interesting video on calendar spreads, and we will be showing you which calendar spread to choose for optimum and balanced trading, including some backtesting results also. So let us start. As we all know, popularly there are three types of calendar spreads: weekly weekly, weekly monthly, and monthly monthly. There are two legs in calendar spread. You sell one leg and you buy for expiry leg. So in weekly you sell current week and buy second week. In weekly monthly you sell first week and buy month end. And in monthly you sell the current month and buy next month. So 2 months are involved. Now let us find out which one is better, which one is optimal. To compare all three types of calendars, what we will do, we will create all the three calendars on same date and with same strikes, not changing anything, so that proper comparison can be done. And then we will check the performance after few days, what has happened to each of the calendars. And then based on those outcomes, we can conclude that okay, which one is more optimal and which one is more balanced. So let us start and dig it out. Please like the video for better reach. We all know that for a single lot of calendar spread, selling a near expiry and buying a far expiry, it generally requires around 65,000 to 70,000 rupees, depending upon strikes and depending on type of calendar. To begin with, we have started with a weekly calendar. So what we have done on 1st September at 9:30 am, we have created a weekly calendar wherein we have sold 9th September call and we have purchased 16th September call. Both are of 24,700 strike. Here market is around 24,530. We have chosen slightly out of the money calendar so that when we do monthly, that also becomes almost at the money. So we are going with 24,700 for all weekly monthly and monthly calendar. You can see max profit, max possible loss, and a break-even range of roughly around 530 points in this weekly calendar. This slide gives us Greeks for this weekly calendar, wherein what we see delta is almost neutral, and as far as theta is concerned, we are getting around 156 rupees per day as a decay. Now we kept this calendar till 3:30 expiry, that is 9th of September, and market moved up by 348 points, which was obviously good for calendar because it was a slightly out of the money calendar, and this calendar gave us a profit of around 1650, which is great in percentage terms. It's more than 2%. But important point to note here is that market remained within the break-even range of the calendar, and hence it was very decently profitable. Now let us check other calendars. Next, now let us see weekly monthly calendar spread, in which we have sold weekly call and we have purchased a month end call. Again, we have kept the same strikes of 24,700. Break-even range is slightly better than weekly. There it was 530. Here it is around 620 points. And maximum possible profit is slightly higher, around 9,500, which was 7,200 in weekly. Let us see Greeks for this. So as we see in this case, delta is absolutely neutral and theta is slightly higher than the previous case. So in this case, we are getting a theta of around 286 rupees. Let us see how this weekly monthly calendar spread performed in first 9 days only. Again, we will see what happened on first expiry, that is 9th. So till expiry, market again obviously moved by plus 348 points, and this calendar gave us around 3550, so more than 3,500 rupees as a profit for the same tenure for which we had much lesser profit in case of weekly calendar. Again, good point to note that okay, market remained within the break-even points of the calendar, but profit is really high. You please write it in the comments why this happened, why weekly monthly calendar of same strikes gave much more profit than weekly calendar of same strikes. And let us now check the monthly calendar of same strikes. So this is monthly calendar where we sold September call and we purchased October call of same strike 24,700. So what is the difference? This monthly calendar is giving a huge break-even range of 1030 points. Remember, for weekly it was 500 something, for weekly monthly it was 620, and here it is 1030 points, which is a huge width of the trade. Again, max profit is also much higher, but yes, this profit will come at the end of the month. So let us see what happened to the Greeks of this monthly calendar. So here we see delta is again almost neutral, but see the difference in theta. Theta is minimum, although it gives a wide range, but the theta decay is minimum in monthly calendar. Why so? Please write in the comment section. There is a logical reason for everything. Now let us see the performance after 1 week or 9 days. So on expiry of 9th September, this calendar gave us a profit of roughly around 1400 rupees. So we have seen all the three calendars. Let us now compare. So first let us compare the break-even range. The weekly calendar is giving 530 points, weekly monthly 620 points, and the widest is monthly calendar, which is giving us 1030, giving us maximum tolerance for a wild move in the market. So definitely it is more safer. Second comparison can be what is the maximum possible profit, which is very high in monthly, but yes, you can always say that weekly can be repeated 3-4 times. So that is very similar. Another comparison is about theta. Now this is the main secret. In case of theta, we find weekly monthly is best compared to weekly or monthly. This information really puts us ahead of so many traders as far as managing calendar spreads is there. So what about the actual outcome for first 9 days, first expiry? Weekly gave us decent money, monthly also gave us good money, but it was weekly monthly calendar spread which was the winner, which gave us a lot of extra money. But again, I need to again strengthen that okay, the market was within the break-even range. If market breaks the range, which is difficult for monthly trade, then the outcomes can be totally different. Maybe weekly can give us more loss also. But primarily, monthly seems to be much more balanced compared to the other two calendars. So final conclusions, monthly can be most rewarding as long as market remains within the required range. Secondly, monthly calendar offers the widest range and hence easier to manage. It gives you space to manage and obviously gives you more peace of mind. Also, the monthly calendar trade provides the maximum possibility of profit, higher tradable range, higher break-even range, and definitely for a new trader in calendars, this can be a much easier option. And lastly, as we have seen, monthly calendar spread is much better, having higher decay compared to even weekly calendar spread, and also has a slightly better break-even range. But please do your own backtesting, your own due diligence before deciding which calendar spread you find to be most rewarding. Please feel free to write to us in the comment section for any doubts, any suggestions, any ideas. Do like the video and subscribe to the channel. See you in the next video. Thank you. Bye.